We just lost our closing attorney, Hunter Jones, in Lexington. He lost a staff member. He can't keep up with the volume that we're sending him. Who would you recommend locally?
I'm very good friends with the owner of IMAG Title, but I also like Kentucky Mountain Land Title. So,
we just want to deal with a lawyer.
With an attorney.
Yeah.
Personally, I know Shane Romines really well.
I forget that Shane does closings.
He
I
does.
like Shane too.
Shane does closings, and Seth Reeves does closings. And
Seth is a good one because I went to high school with Seth.
Yeah.
And Seth's a younger lawyer. I mean, Shane's going to retire here in 10 years. Seth will be around a little bit longer.
Yeah, but both those guys, and then Ralph Hoskins does them. And, as far as like me being able to vouch for any of them, I've had Shane close some deals, and I know plenty of people that have had Ralph and Seth close deals, but I've not personally dealt with them. Yeah, so
sounds good.
On a business level.
I reached out to the Tiptons today.
Yeah, and I've always big fans of those. I use those guys for personal use 15 years ago. Yeah, and just great guys. Yeah.
If you. What's up, guys? Barrett Freeman with the PropertyTales podcast. Thanks for joining me. Today, I'm with Ben Minton. He owns a business, Mortgage Hub, here in Corbin, Kentucky. I have invited him on to talk about the first step of buying a house, which is getting a lender. So, Ben.
Hey, guys. I'm Ben Minton. I own the Mortgage Hub. We are a wholesale mortgage brokerage located in downtown Corbin. If you guys are familiar with Corbin, we are directly across the street from the Wrigley Tap Room. We are a very, very busy mortgage brokerage. We take a ton of applications. We're one of the busiest mortgage brokerages in the state of Kentucky. We have 10 loan officers, including myself, and we're just here to answer any questions.
So every episode, at some point, I go over the house buying process. And the thing I preach over and over is talk to a lender. First step, talk to a lender. And then somebody will give me some objection, like my credit score is bad. Please just talk to a lender. Well, what about this? I was like, you talk to a lender. Mm-hmm. And here's the Mortgage Hub. So when I literally grab their hand and walk them over to your office, what happens next?
So we do a preliminary application. We do a soft credit pull. So one of the first objections that we often get is, I don't want you to pull my credit because it'll ding my credit. First of all, that can be a myth. If you have a lot of inquiries on your credit, that can ding your credit for sure. But if you don't have any, it can actually raise your credit a point or two. But we don't do a hard inquiry. We do a soft inquiry. It's cheaper for us to do it. It gives us all the pertinent information, and it doesn't count as an inquiry on your credit. And, when we actually get further into the process, if we pre-approve the customer, and we get them out looking for houses, we'll go ahead and do a hard credit pull at that point with their permission. And the soft inquiry gives us plenty of information to go off of. So it shows us, a lot of times somebody's 20 points off, and I can look at a credit report in 2 minutes and be like, hey, if you pay this credit card balance down, or you do this little minor thing, and sometimes it's hundreds of dollars that's separating them from buying a house. So we take things like their name, date of birth, social security number, their job information for 2 years, and their residency information for 2 years. And off that, within 30 minutes or so, we can say, hey, yeah, if you're either pre-approved for this loan, you qualify for a 0 down loan, you qualify for an FHA loan, which requires 3.5% down. Or if you've got somebody who's, wanting to put substantial money down, it may be a conventional loan is the best choice. But we give them all the options and explain to them, hey, if you go this route, this is what you're looking at, payment-wise. If you go this route, this is what you're looking at payment-wise, and just educate them to where they can make an informed decision on their own. And we do that every day. And we're not 9 to 5 people. We're 8 to 10 people, 8 a.m. to 10 p.m.
I tell people all the time, you answer the phone at 9 p.m.
Yeah, I do, and it's just part of my
healthy.
Life. Well, it is what it is.
You got to do it. It's the business.
It's part of the business.
So what documents do you need, basic?
For pre-approval, we don't collect any documents up front. Now, in a perfect world, Barrett, we would get everything up front, and you would have like literally 0 fall through rate. But in the practice, if a realtor's sending me an application, if I don't pre-approve them over the phone in 30 minutes, they're going to go to the more expensive guy up the street, and he's going to pre-approve them, and we're not going to get the loan. So basically, the way that it works is I go off a stated application, and that's pretty common practice in our business. Sometimes if you're waiting around for a customer to bring you tax returns or W-2s or pay stubs or whatever, you might be waiting 3 days, and the deal they're putting together is already gone. The house is pending, or
it's
whatever.
Already tenuous anyway.
A
lot of these guys are like, I'm not sure if I even want a house. I'm kind of exploring the idea. my wife and I talked about it a few days ago. That's what I hear a lot on my end.
But in a perfect world, we could collect all that stuff up front and we would never have a problem. But, in practice, we pre-approve them. I mean, we're all adults. So, if you call and you're making $20 an hour and you're telling me you're making $30 an hour and I pre-approve you based on that and you just straight up lied, that's going to avoid the pre-approval. So, and I'm just very straightforward with people. I'm like, look, let's go conservative even if you don't know. Or, a lot of times we'll ask very deep questions, if they get overtime, how much have you made year to date and things like that. And, I'll even have them send me copies of their pay stubs electronically, text it to me. Let me study your pay stub if they're close. Now, sometimes it's not necessary. You pull somebody, they've got pristine credit, pristine job history, and they're only, their debt to income ratio is really, really good. And I'm like, yeah, that's no problem. They know they want to buy a $200,000 house and they could afford to buy a $400,000 house. So, but if it's really borderline, I try to ask as many questions and get as much information as I can in a timely manner. And then just pre-approve them based on that. But then once the actual pre-approval is in place and they're ready to pull the trigger on a house that's listed, we have to collect W-2s, pay stubs, bank statements, and photo IDs, the main 4 items. And if they're self-employed, a couple years tax returns. So,
yeah. So I'm always surprised when I do ask some of those deep questions that people don't know the answer.
That's true.
I mean, it's your finances.
Yeah. I mean, certain, and a lot of times we get the ones where I'm talking to the husband or the wife and the other one handles all the finances. And a lot of times I'm talking to the woman or, the spouse that doesn't work as much because, she doesn't work the 60 hours a week that he works. She might work 40 hours a week. And not to sound misogynistic or anything, but that's just generally how it works. And so I talk to a lot more wives than I do husbands. And
we say that in the sales side is the woman makes the house decision.
They do, yeah. I mean, and even if I'm talking to the husband, he's like, well, let me call you back. I got to talk to my wife. And, that's not the same with everybody. I mean, you get husbands and husbands, wives and wives, and just everybody just has to be on the same page. And a lot of times I end the call with, hey, whenever your wife or husband gets home, call me back and I'll go over this with them and make sure that they're on the same page and make sure we understand everything.
So once they get a pre-approval letter, they're ready to start house hunting?
Oh, yeah, absolutely. I took 2 calls today. Within 30 minutes, I had the pre-approval letter sent out to the realtor and to the borrower and went over, different scenarios and said, hey, when you get ready, when you really get locked in on a house, call me, tell me what the offer that you're going to put in is. That way you kind of know what you're getting into before you pull the trigger.
And that's something interesting. I do that, but I'm buying houses all the time.
Yep.
Sometimes you do need to have a conversation with your lender before you actually make an offer.
Oh, sure.
Especially if it's one of those things where you're pre-approved like a month or 2 ago and you've just been hunting, so that is a good point.
In normal times, that's not that big of a deal, but since, the last 2 or 3 years, since the rates, went from, 2.75 to 6.7, well, actually at one point they got up near 8 on residential mortgages. I remember in 2022, they were moving so fast. I mean, we would pre-approve somebody on a Monday and Tuesday they'd call back and I'm like, your rate just went up 0.5%. That was an insane time to be doing this. But in general, unless something changes, debt's been incurred, somebody got a raise or somebody got their hours cut back, you're usually okay because they're fairly stable. I mean, they're moving moderately here and there, but not drastically like they were a couple of years ago.
How many days do you think it takes to close a loan on average?
Well, it depends on the customer.
I know. It's not a fair question, but I think it's one people would ask a lot.
Well, I say this about lenders. When we knock one out of the park, we like to brag about it and say, oh, we closed this loan in 18 days or 20 days or something like that. If we did that, it's not because we're awesome. It's because the customer's awesome. And if we took 40 days to close one, it's probably not because we're bad. It's probably because the customer didn't have their stuff together. So, on average 30 days, but, have we closed them in 2 weeks? Yeah. Have we closed them in 6 weeks? Yeah. So
I encourage people to do a 45-day close date on their contracts just to be safe.
Yeah.
But there's so much pushback.
There is. And, I work with, before we started this, the podcast here, you and I were just talking about, how much we cross-reference into other people's worlds, and I cross-reference into, title attorneys. I cross-reference into realtors all the time. And I want to know enough to be functional, but I don't want to know enough to steer out of my lane and get into y'all's lane because, I'm not a realtor and I don't want to act like a realtor. But yeah, in general, if we got every contract in that had 45 days on it, it doesn't mean we're going to take 45 days, but it keeps from having to go back. If you put 30 days on a contract, I think some realtors, I understand in a hyper competitive market that, if this one puts a 30-day contract and this one puts a 40-day contract and they're the identical offer, they're going to take the 30-day contract. And we don't want to see anybody lose out on a house because of that. But at the same time, I've literally got some real estate people that'll put 25 days on there thinking that that's going to speed me up. And, I want to get the loan closed as fast as you do. Just like the realtor, I don't get any money until the loan closes.
Right.
So we're incentivized to close them as quickly as possible. But, when you put 45 days on there, I would never tell a realtor to not put 45 days on there if it's going to be detrimental to the buyer. But at the same time, I mean, if we put 30 days on there and we close in 31, we've got to contact you and ask for an extension. When if you put 45 on there,
It's more paperwork.
it's just more paperwork. Yeah. So, I mean, in practice, that's the best practice by far. Sure.
It's also, we battle reality versus illusion all the time.
Sure.
Obviously, we want things to close in 30 days
Absolutely.
or less, but that's not the reality.
Sometimes it's not.
It's rare for us. I mean, you've done a few loans for us. It's just tough.
Well, we do. Anytime you're dealing with a mortgage broker or mortgage company, and I could explain the differences there, but we all deal in government-backed loans. That's all we do. We're not a bank. We're not an in-house bank. We can't do the in-house bank loans that have the less stringent property requirements on there. But sometimes it's just a matter of an appraisal, like you got to get a handrail fixed on a house, or there's a broken window, or something like that, and it sets us back 5 days or 7 days. Or
Also, I mean, a contractor can't drop his tools and come work on your house.
Right, exactly.
We're about the only company around here that has our own team, and even us, it'll take us a week or two to move things around to make it happen.
Yeah, especially in weather like this. If you're in January and it's snow on the ground, and things like that. But yeah, I mean, we would like as many days on the contract as possible, not to buy us more time, just to avoid. You never know when a title issue is going to happen, or an appraisal issue, or the customer does something that they shouldn't do, like they go open up a debt or something like that.
Or change jobs.
Or change jobs. Yeah, absolutely. And I actually had a closing here about a month ago, and your brother Blake was there, and we were talking. He wasn't part of the closing. I think he had a closing right before I did. So we met at the title company, and he was asking me questions about how I get paid, and I was like, I was explaining it to him. He was like, "Oh, I didn't realize that. I thought you charged the customer for it." And I was like, "No, we're a wholesale broker, so we've got all these different wholesale banks that we deal with. We shop and find the best deal for the customer, and if I send a loan to PennyMac or United Wholesale Mortgage or somebody like that, it's because that's the best price for the customer. And that lender pays me directly because, the majority of the money that's collected on mortgages is collected on the interest over 30 years. So they're willing to pay me money to send them a loan and let them collect the business, or have them turn around and sell it to another lender. So no, we don't charge the customer for anything. But it's just to explain it to Blake, and he was like, "Okay, that's very interesting. I didn't realize it."
You were talking about earlier, but you once you get that call, you have to qualify them now, because they will go down the street.
They'll go down the street or something. They'll find a lender who will qualify them. And just like realtors, I mean, you probably if you've noticed between the last 2 years or so, there's probably the number of realtors that are in the Corbin, London market, it's probably went down 30-40% or something like that.
Everyone's having to take a day job now.
Yeah, everybody's taking day jobs because the rates have been up, the economy's been bad,
prices have stayed high on houses.
Prices on houses have stayed high, so it's kind of it's a formula for a negative market. And when you're in a negative market, not only do some of the realtors go away, and then some of the other ones that stick around are having to scrap for every deal they can get. Same thing in our business. We went from having, in London and Corbin, we went from having eight or nine mortgage companies to 3 in the last 2 or 3 years. So most of them have folded, and we picked up most of the business because we're the only wholesale lender in the London Corbin area. But yeah, I mean, it's just educating the people on the difference between an FHA loan or a USDA loan. And the sad part about it, Barrett, is that I've seen many customers and many lenders get directed to a loan that's more profitable for the lender, but it's not the best deal for the client.
Sure.
It's just not.
All right, man. Thank you for joining me. Let's do this again in a few months.
Yeah, I'm glad to be here. I'm happy that you asked me to come over, Barrett.
Yeah. All right, guys. It's been another episode of the PropertyTales podcast. Thanks for joining us. We'll see you next time.